Okay. All right, guys. Thank you for being here. I'm Jim, the option professor. A quick background on myself for the new people here. I'm a graduate of Boston College, and I've been doing the options for decades and decades and decades. I've done seminars throughout the nation for many thousands of people, and I will go into my opinions and my observations here. But of course, I don't do advice. So again, you should consult your brokerage firm to discuss suitability and risk tolerance. But again, I'll be sharing my views right now. Okay, guys. So what do we have here? We got the S&P 500. And by the way, at the end of the broadcast, I'll explain how I deliver information to you every week. But on the S&P, not surprising to me. In my alert that I handed out on Sunday night, I said, the first couple of weeks here, we could have a pullback simply because we got tax time coming up on September 15th, and we've got a rate cut that people are going to react to one way or the other. And so we've already had a nice reversion to the mean today. We went down to the 63.75. Well, I guess we went down to 63.60. So right around the 63.75 neighborhood, right? But more importantly, we closed well above it. And so we are well above the 63.76 now, and actually above the 6400 as well on SPX. So that's good. That's good. Now, another thing that was good today was the VIX had a nice little spike up, but it really calmed down, as you can see. So here you see it jumped up towards my my yellow and my purple, right in between them, between 19 and 20, something like that. And so we went into that neighborhood, and look what we did. We came right back down into the 17s. As long as this VIX behaves itself under 18, I think that the market can go a lot higher as people just keep plowing money back in and back in, back in. Again, it does come down to earnings. People wonder where these prices come from. I mean, it's all about earnings and how much they're going to pay for them. So if you take $275 of earnings in the S&P 500 and you multiply it by 23 times, you're in the 64, 6,300 neighborhood, which is where we are. Now, by the end of the year, if those earnings continue to grow towards the $300 level from 275 and you took a 23 multiple, you're in that 6,900 area, which is the 6,800 to 7,000 that a lot of people who are pretty darn sharp are predicting. So there's an actual reason why the prices go up and down. Again, the reason that we had the big tank job in April was because with those tariffs, people were saying there's no way companies are going to be able to make any money. And the consumer is going to get whacked hard. So that's why you went into this deleveraging phase, as I'm showing you right now. Now, that deleveraging phase took a lot of big money, a lot of family home office money, and they got them all, get them out. And so since May, they have been slowly but surely releveraging the deleveraging they did during March and April. Okay, so that's been the story. And as you can see from my blue line, it's been a dancing seal the entire time. One time it got tested, one time it got tested, it just got tested again. So as long as they keep passing the tests, I don't think we have to worry about that big drop coming way down here. But if they started to, consistently stay under the 6,400 neighborhood and get these moving averages to point down like they did back in February, then the risk will be changing. And then you better know where your raincoat is because you're going to get whacked very hard whistling past the graveyard. So the bottom line is that's not happening exactly right now. But let's also take a look at the RSI because that'll give you an idea if we've run out of steam. So let's put that up there and take a look. You can see the RSI here jumped into the 64 area, but it was also at 76 over here. So once 76 became 64, you had a reversion to the mean. Then we come back up here and we're at 67, 68. Again, can't really take out that 78 RSI, so you had a reversion to the mean. Now we just had a new high and the RSI only hit 64. So again, it's not exactly a robust RSI right now. If we blow out 6,500 and you start seeing 70 on the RSI, you're going to be looking at that 6,600 to 7,000 area, I would imagine, pretty quickly. So you got to keep an eye on it. Don't forget they gapped it down, so they might be just trying to fill the gap. That's a big gap. So again, watch this rally. It goes into 64.40, 64.60 neighborhood, right? See if in fact it can get through that. The blue line's pointing up. So if it starts trading 64.60, 64.80, you could build a good case that this was a bologna sandwich and this thing is back on the bicycle. Right now, that RSI down here doesn't really tell me that. But of course, we're down here at 64.15 on SPX. If we were to get above 64.60, 64.80, and this baby goes back above 50, that would be more evidence that we might be turning. So again, I think it is a very important day today because you had a test of a neighborhood that had to hold, and it did. You had a big move in the VIX, which had to stop, 19 or 20, had to stop, and it did. So again, from those two aspects, again, and Tuesday can be a turnaround area. So wouldn't be surprised if we got a turnaround tomorrow. And again, a couple of stocks that might fuel that is, Alphabet. You just got a great report that those guys don't have to get rid of their search engine, which obviously is kind of a big deal. So that's why you're up $15 in the aftermarket on Google. Okay. And obviously that shouldn't be bearish for the whole market. Also, another recipient of good news was Apple Computer, which basically also turned up about $7 here in the aftermarket. So it's blowed. In the aftermarket now. Again, that's not that's the post market activity. But if we start blowing at 235 here, I mean that's going to be pretty darn constructive for Apple. And so those are obviously pretty good weights in the index. So that's a pretty good sign that maybe we could have a turnaround Tuesday. So keep on your toes. I think you've established some pretty good numbers here today. That 63.75 neighborhood, that is an important neighborhood. So if you are bullish, a break of that neighborhood would be something to turn your tune around. If you're bearish, you could be hoping against hope, hoping things come down. If that correction of 63.60, 63.75 we saw today was it, and that VIX popped to 19.20 is it, and you're trying to short the thing, you might have a little problem with that as well. So that gives you a little bit of a rundown. It gives you parameters. That's what you're looking for sometimes is parameters. QQQ, that is losing altitude. There, again, this actually looked weaker than the S&P because it did come back down through it. Again, it has a gap that it might go up and fill as well. In fact, right now it's at 568, so it's trying to fill that now. So the neighborhood of resistance on the Qs would be coming in around 570 ballpark area, something in that neighborhood. And so if it gets through that neighborhood, then you're in good shape there as well. The semiconductors, of course, been a big darling, but there is a rotation seeming to go on a little bit here. So if you look at the 1 year on that, that doesn't look so good, but it's a gap down. So let's see if they can fill it up. But you got two good gaps here. One's around 290 ballpark figure. The other one's around 300 ballpark figure, right? So those gaps may get filled like this one did. You see there was a gap here and they filled it. Once they filled it, it was go south right away. This thing's trying to hold 282. I think that's an important, you want to look at a level to defend. I think that the 282 number area seems like an area to defend. And then, of course, again, getting back above these numbers up here, which is which is on your semiconductor here, SMH. Definitely, you'd like to see a 295 print, and then above 300, and then you're back on the bicycle. So there is some risk here, and there's risk of an acceleration. Okay, so they're going to have to stem this flow. 280 right there, you can see. You don't really want it blowing that out and getting that VIX way down, getting that RSI way under 40, because right now it's around 44. So, we want that RSI to stay above 40 for sure, and we'd like to see the SMH stay above 280 and not accelerate to the downside. So there's some gaps to be filled. I would imagine turnaround Tuesday may go up and fill those gaps. And then by Wednesday or Thursday, we'll have a much better idea if this was a one-day only sale here this morning, or if in fact this was the real deal Holyfield. It's bouncing back up, and now it's going to be met with an additional acceleration to the downside. The VIX isn't saying that right now, but if the VIX started showing 19 or 20 again or 21, believe me, I would imagine you're going to be going down pretty good on the south side. So keep your eye on the VIX, keep your eye on these levels I'm mentioning, and I think that's the way to go as we speak. Um, I would like to take a look at some of the option ideas that we've been working with in the last few months, give you an idea of what I'm looking for and how it's been very helpful to subscribers who have followed the information that I've been putting out. One was Block XYZ. And just to give you an idea here, I was looking for a setup on Block and we got it right in here where I had all these averages converging and my yellow line. See, once you get back above the yellow line, it can really take off. So I saw this as a consolidation. You go a little bit out of the money on the calls, you get the nice big pop to fill the gap, which it did, and then you take your money and you run. So that's kind of the way that has gone. It's still trying to be in an uptrend, and it looks like it could still take off, but it's not as it doesn't have the same formation as down here, where I thought the potential was much greater because the gap had not been filled. So it gives you an idea of some of the things that I'm looking for. Had a couple of really good ones here, and then if you didn't get out, they fell apart. So that's why you got to trade these things. And this is called Trade Desk. Now, the first time we looked at Trade Desk, it was down here in April, May, and the consolidation of the averages, and then bam, great move. You know, when they bam, you grab the money. Okay. Now they came back down. You gave you another opportunity here. Okay. Right around this 80, 65, 70 area and right into the gap. And once it got right back above 75, it gave you another opportunity to go further into the gap here. It never filled the gap. And then boom, it went up to the gold. Now you're going against the gold line here, and you have a large gain. You know, you don't look a gift horse in the mouth. You grab the money. With options on the long side, you're always fighting time and price, so you don't get a lawn chair out and just sit there because look what happened if you sit there long enough. That's a collapse. Boom, all the way down to 50. So not only did you not make your money, you lost your principal as well. No reason for that, none at all. So again, when you get a pop on some of these things, in my views, try to shall we say, take advantage of the movement that you get. Let me show you another one, a couple here. Well, I'll show you one from recent time here on Alibaba. I thought this one looked pretty good. Again, you're consolidating here with these averages. These consolidations are always met with some type of breakout. They don't stay in a traffic jam forever. The blue line's pointing straight up. It got tested a couple of times. Still, it's pointing up, and it's very powerful in my view. So this is where you start taking a look at your calls a little bit above the 120 mark. And then obviously there's a gap up here that needed to be filled, which it's trying to do. There was also a gap here that had to be filled. And so the bottom line is that great pop, great opportunity, big jump in premiums, not a bad deal. And again, after it makes a move, you have to make a decision. Do I want to spread it and turn it into a debit spread, but get all my money off the table by selling the out of the money call for more than what I paid and get a free look at a spread? Do I want to take my gain and roll the position up, maybe into a call spread, so I have less money at risk, but still an opportunity to keep going? Or do I want to grab the money on this and look for another opportunity that might not have moved yet? So during our coaching sessions that I have one-on-one with the subscribers, we can discuss how to come out of these things as well, because a lot of people don't know exactly what their alternatives are. And one of the advantage of talking to somebody who's traded thousands and thousands of options, they would know maybe a larger menu of choices when you have a market working for you or a market working against you. So that's kind of helpful as well. Another one that a lot of people thought it was crazy, but I thought Chevron was a good deal, and Chevron's been a good friend ever since it turned up here at 138. Again, you have your traffic jam, and now you have the markets all going up. So obviously, this is the time to be bullish. And if you get in there when it's close to the averages, and then it goes way up, you obviously have some kind of a positive situation. You grab your money, comes back down to the support. You can try it again, comes back up, you can take some money, comes back down to support, try it again, goes back up, take your money, come back down, try it again, up, back down, and now we're up. And again, I always thought that this was going to go after this 166 to 161 area, which it did today. Is it going to keep going into there? It might, or it might not. But the bottom line is you certainly had opportunities if you took your calls against the support here to do fairly reasonable with just a little bit out of the option and maybe a 1 month deal. And I think that would have been not a bad way to play Chevron all the way up. And again, like I say, once you get a big move, you want to make some decisions. What are they? Right now, you could also go to a short-term option, like a 30-minute. And as long as the 30 minutes in good shape, you can stick with it. If the 30 minutes starts looking terrible, then you can make your adjustments accordingly. But this is a way of letting the moving averages and the market price kind of dictate your activities rather than abject guessing, which is stressful and probably has some pretty spotty results. So let's go back and take a look here at a couple of other things because there is a lot going on out there. And, there are stocks you guys probably haven't really followed that I follow because they've been pretty good to be involved in. One is called Teradyne. I don't know how many people are following that one, but that's been a darn good one, and it still looks pretty good. Another one that has been pretty good and has matriculated to the upside is APLD. Now, again, it's stalled out now, but down here where it's consolidating, believe me, these calls were not that expensive, and they went on a pretty nice run because they went $7 up on this move, which is a 70% move. So that's quite a bit. And this company has a good story behind it, so that's interesting as well. Some things in the healthcare area, that look like they could have a future is Tempest AI. And you can see here that it, started out pretty nice, right? And then it popped really nice up to 86, came back down. And so it's back up here. Keep an eye on it. They've got technology that helps the healthcare industry. And healthcare does like technology because it obviously can reduce costs. And reducing costs is definitely a big thing in this day and age. That's why the tech stuff is so popular. Let me just see here a couple of other ones. Well, this is from earlier in the year, and I just wanted to show you how sometimes you can ride a trend for a long time. This is Roblox, and as you can see, it get into this consolidation after the big after the big drop in April, and then you went down and tested gold, and then look at that. It was just a very, very good market to continue to stay, with your bullish strategies. And obviously the blow off here, when you get a parabolic move up, since their markets are symmetric, sometimes it comes right back down again, which is what it did. Right now, it's in a very interesting neighborhood because if this thing is going to keep going on the trend, this is the neighborhood where it might launch out of. So keep an eye on RBLX because it's already proven to you that it can really move. So you keep on that. Let me hit a couple of stocks that you guys are probably interested in anyway, and then I'm going to explain how you can get my stuff each and every week and also get educated by myself personally. So let's look at Palantir. Okay, Palantir. And get an idea here, because this one's been a pretty good one too. This thing basically since $40, it's been on the up. Now, when it gets way away from my averages, I figure there's going to be a reversion to the mean. So when it reverts to the mean, and this is a very sizable reversion, and then gold is an excessive reversion. So I always say this is probably not a bad time to buy, and this could be a great time to buy if you get it. So bottom line is down here in the April timeframe during the crash, right? Obviously, it's on sale. And after they pulled back all those crazy tariffs, then obviously that was the reason it was tanking. And now it's back on the upswing. These guys have a great business. So they're ridiculously highly valuated, but there's a reason for it. Companies go to these people and they say, here's our problems or here's our situation. And they can take a look at your supply chain. They can look at your personnel They can look at all types of things as far as your margins are concerned, and then they can come up with a tailor-made software to help you and your company. And a lot of companies that have tried this have really benefited. So the word of mouth on this thing is pretty wild. So not only are governments using these guys, but also corporations. And that's why this stuff, continues to matriculate up. There'll be a day, I guess, if somebody comes along with either a better mousetrap, or B, these companies can't afford and governments can't afford to pay money out. But right now, that's not the case. So this thing is just pulled back. If we were to start closing back above the 168, 170 area, that might be a situation to tell you that you might be going back on the bicycle. So you got to be careful. Could always pull back. Valuation's really high on this one, so you got to be careful. But and Nvidia is another one that obviously is under pressure as well, because they missed on their data center numbers. And nobody talked about that because the numbers overall were so tremendous. But, again, they did miss on some data center numbers, and that is definitely took the bloom off the rose here a little bit. So you have to be careful here, but it does have some support right around this neighborhood. And then, of course, this 150 area where these highs were, that's a logical place where if it did fall apart, 140, 150 might be as good as it gets if you're bullish on NVIDIA longer term. But keep an eye on it, because that's kind of interesting right now as well. Yeah, and the healthcare industry also has other companies as well that might be benefiting. Medtronic had a big run up, then a pullback, and so if it can get above the gold line here, it could have a very bright future, as you can see. So watch that 95 neighborhood. That's the wall that it has to climb to get into the other side. Another couple of them that are down now, where obviously the premiums would be down, is Qualcomm. In my view, is consolidating here. And if we talked in 3 to 6 months, I would be a little bit surprised if it hadn't been able to break out and get going. Okay, but it definitely has to close above 165. So once that occurs, that would be something that would ignite me to thinking that it looks very high probability that it might go up. And then another one that is kind of lazy right now is PayPal. And that again is in a very tight consolidation here. And the numbers are 68 to 72. Market's at 69. I don't think it's going to stay here forever. And then if you look at the 1 year, again, it's consolidating right around 70. So if this thing could start trading 72, 74, 76, it's got a gap here to fill, and it's got a gap over here to fill. So there is potential to this. I don't know if this area here is telling us that this is a company that's going to collapse, or if this is just, shall we say, consolidation, and it's a prelude to closing this gap at 78 and that gap at 88. So I'm watching this like a hawk, because these options are dirt cheap as well as far as the premiums are concerned. So that gives you a couple of things that are not on everyone's radar, that are a little out of favor, but could have some potential as the rest of the year unfolds. All right, guys. Well, we got 5 minutes, so I'm going to explain how I can help you. Okay. We have a thing called the Options Alert Service, right? Everyone's got a service, so I realize you're inundated with these things, but I can only tell you what I can do for you. So we've got an Options Alert Service, and basically you get 3 things that I and my associate Daniel Sinig of Trading Indicators believe, and that is that the investor needs education, all different levels, starter, intermediate, advanced, but you still need always education. Second thing you need is ideas, right? That you might want to mess with or tinker with or change around, but get some stocks in front of you that you're not looking at that could have some great opportunities to them. So ideas is a key thing. So that's number 2. And then the number 3 thing is, a lot of people, haven't traded these options all that long, and even if they have, they certainly are not at the expertise level or the experience level of many people out there. So I work with one-on-one coaching. Each subscriber gets my cell phone. You text me and tell me when you're going to be available, and then we set up an appointment. And then you'll look at my screen, where I'm showing you the charts, and then you'll tell me what stocks you're looking at. I'll share with you the ones that I'm looking at. We can talk about option strategy. We can talk about how to adjust the strategy, when to adjust the strategy. I can share you my opinions on all that because I've traded thousands and thousands of contracts. So obviously I've been in about all the pickles you're probably going to find yourself in. Because again, as you know, over the last decades, there's been a tremendous amount of environments. And so I've traded options in all of them. So again, and I work at the speed of the subscriber. So if you're just starting out, we're going to start out, as deliberate as we have to, and then we'll move forward once you what? Once you get it. Now, if you're an advanced guy and you're trying to do credit spreads or iron condors or these multi-leg deals, we'll talk about the veracity of those strategies. Do they really make a lot of sense? Can you make any money on them for all the bid-ask spreads you're buying and selling into, and how many legs you got to keep track? I mean, is there any value to them? And if there is, that's great. But if there's not, maybe there's other strategies that might be more rewarding to you potentially and really don't cost that much out of pocket. So we can discuss that as well. And again, most people have trouble, identifying a timing situation on the entry, but more important, risk management and sizing and all these kind of choices that you have to make. I can share my opinion on how to do that. Because abject guessing, luck runs out. So you want to have some methodology to your exit as well as your entry. And of course, one-on-one coaching. So let's put that thing together here. You're going to get what? You're going to get a options master class. That's 3 hours, 6 hours, 3 sessions. So a lot of information. It's online. As soon as you buy, boom, you get the link. You get your receipt right away as soon as you click complete purchase, and you'll get your course with the receipt. So you get the course, you can start studying tonight. Second thing, every Sunday night, you do get an alert from me and actually sent out by Daniel from info@tradingindicators.com. And it'll show you ideas that I think might have some merit. And you could check them out and see what you think. And again, some of them are longer term positions, like back in April and May when prices were way down. We looked at longer term positions on NVIDIA when it was at around 100, Constellation Energy when it was in the hundreds, Oracle when it was around 160. So obviously we do not only the short-term stuff, but we do have some longer-term stuff if we think there's merit there as well. So you're going to get ideas every Sunday to consider. And then finally, that I think is the biggest thing. You get my cell number, you call me, you talk to me. You have questions, we go over your questions, and we try to educate you on a one-on-one basis. So that's an awful lot for your money. And here's the total cost, which I think is extremely low. You can go quarterly for $297 because we are giving a discount of $100 right now. So you got $297 if you want to go quarterly, or I think the smarter way to go is go annual at $897 because you get 4 times the coaching, 4 times the ideas, and at $897, that's $100 discounted as well. I think it's a pretty good deal. So again, check out the link coming up. If you have any questions for me, it's optionprofessor@gmail.com. Just shoot me an email. Otherwise, I'll be talking to you soon. Thanks for hanging in there with us. And I hope you learned something today. And again, don't forget, sign up for the alerts and email me if you have any questions. Have a good night, everybody.